Hi, everybody. Welcome to our webinar today. My name is Catherine Ring, and I'm the VP of Marketing for ZSuite Technologies. Today, we are going to be hearing from our esteemed CEO, Nathan Baumeister, who you should also be able to see on your screen right now. And he's going to be talking about what is commercial escrow, who uses commercial escrow, how can you use commercial banking to manage liquidity, all of those good things. If you have any questions over the course of the webinar, you can enter them into the chat and either he or I will answer them. And we love questions, by the way, so feel free to ask at any point in time. And also, if you are having any technical problems, the first thing to do is reload your screen. It will not kick you out of the webinar. You just need to hit the reload, and that will should help solve anything that you need. So with that, I am going to hand it over to Nathan. Nathan, go ahead.
Awesome. Thanks, Catherine. Excited to be with y'all this week, the week before much of the holiday season begins next week between Christmas and New Year's. As we talk through today, there's no doubt that over the last little while, deposits, liquidity management, all these different types of things have really come to the forefront in our industry for all the different reasons that we're familiar with. And we're pretty excited about that because when we started our company in 2019, we were working to help drive deposits through commercial customers. Some of y'all wanted those, but most of you were like, hey, I'm pretty good. So it was nice to be able to build the product in that type of environment so that when the need for deposits kind of popped up and became a big thing, that we were ready to go. But not only were we ready to go, we actually found a huge opportunity after we started the company of what is a very, very interesting, a very niche, a very large and very lucrative source of deposits through commercial customers, commercial clients of yours. And that is through commercial escrow and subaccounting. Now, a quick story. I was talking to a banker several years ago who has really kind of built her career on commercial escrow accounts for over a decade now. And she was just starting at a new bank, and she joked around with us that she felt like the first 6 months of her job was basically saying, no, not that escrow, not mortgage escrow. And so as we have gone out to the marketplace and we have talked about growing deposits, it has become apparent to us time and time again that it is extremely helpful to paint the picture of what is commercial escrow, what is that opportunity, because for most banks, it's something that they're not super familiar with, nor something that they have done in the past. So that's what we're going through today. So very high level definitions on commercial escrow and what our platform, ZSuite can help. But really, whether it's our platform or something else, this is a wonderful vertical for many financial institutions within the US, which is ripe for disruption. So the first broad use case that we look at is something that we term three-party accounts. So with your typical traditional deposit account, you as the financial institution are holding the deposits, and those deposits belong to a particular entity. If it's a consumer account, it would be a consumer. If it were a commercial account, then of course it would be that company. And so you typically have two-party accounts. So it's just the financial institution and whoever it is that actually is holding those particular deposits. When it comes to introducing a third party into the structure of the account, what happens is oftentimes this breaks the typical infrastructure that's been created with the technology stacks throughout financial institutions. So just to play this out a little bit more, with a typical escrow account or a trust account, you also have these with FBO accounts or omnibus accounts as well. You have the financial institution where the deposits are being held. However, there is a company who is typically the signer on these accounts or who are the controller of the funds. However, they are not the owner of the funds. that is where you have the third party, which is typically a customer, but in some cases, this could be a commercial entity as well. And so once you introduce this third party where you have one group being the signer, the other group being the owner, it creates a little bit of chaos. And now there's two ways that it typically creates this chaos. The first one is going to be trying to support these types of accounts on your core through your online banking systems traditionally has proven to be extremely ineffective and very, very labor intensive in regards to manual processes. A lot of people having to touch things in the back office, adding things manually, opening up accounts in a mass perspective that takes a large amounts of time. We had one financial institution that we talked to who they won a new client, had several thousand escrow accounts. They were super excited until they had to close a branch for a couple of weeks to just open up the accounts themselves. We had another financial institution that got excited about the escrow opportunity, kicked off their business development efforts, ended up getting about 10 to 15 clients for over $200 to $300 million of deposits. But then they looked around, they had 3 full-time people doing nothing but answering the phone all day. Hey, what's my balance on this account? Hey, can you do this? Hey, can you transfer the funds here, et cetera, et cetera. So that's the first part that creates a little bit of that headache. The second one is that legislators find this as a very common place where they want to add protections to the customers. The general idea is a company who's going to hold someone's funds is likely to abuse that power of that customer. So they feel like they need to write laws on what that company can do in the first place. So with that, it doesn't add to the banking the banking compliance burden. What it is it's a compliance burden to your end customers then, where they have to comply with different laws. And these laws sit in different jurisdictions. So it could be at the federal level, it could be at the state level, it could be at the local level. And so there's lots of complexity on what can be done with interest, who needs to get statements. Are there certain notifications that need to be sent out? Is there certain criteria of what has to happen before something can leave? All this stuff. So again, this just adds to the manual labor intensive processes, not just for the financial institution, but for your customers as well as they're managing these 3-party accounts. Now, that's one of the big use cases. The second one that we have in the commercial use cases is what we refer to as subledger accounts. This is when you have a commercial customer who has a certain amount of deposits. In this case, it's $800,000. They have this in an account, and they want to create boundaries around those dollars for specific purposes, but they don't necessarily need to open up a full new account. So the example here is you have a municipality that have $800,000. However, portions of those deposits are being set aside for very specific use cases within that municipality. So these are the 2 big broad use cases. Within these 2 broad use cases, there are trillions of dollars in the US economy that are sitting in these 2 use cases. And the truth of the matter is they're sitting at very few financial institutions because there are very, very few banks that are out there in the marketplace who have gone into this business, whether because of lack of knowledge or because of lack of ability to support in a cost-effective manner. And when you look at the types of commercial customers that use commercial escrow and subaccounting on a day-to-day basis, this is like the who's who of the type of customers you all would love to have, not just from a depository perspective, but also as cash management, treasury management services, as well as lending. So we're talking landlords, property managers, title companies, law firms, municipalities, 1031 exchanges, real estate offices, nursing homes, not-for-profits, funeral homes, and this is not exhaustive of the list of all people that use these types of accounts. So big opportunity. Historically has been very, very hard to service. That's basically why we developed our product, ZEscrow, was to kind of take that out of the equation to help make it easy for both the bank as well as your end customers to be able to manage these in a much more effective manner. But in order to be able to really dive into the opportunity, I know a lot of our financial institutions always like to ask the question, well, can you tell me more, like more specificity? And in my market, what does this actually look like? So what I'd love to do is just share a couple stories of actual use cases. Now, whether or not these specific use cases apply to your specific market is something that you could talk to us about and engage on. But more than anything else, the reason I want to share these stories is so that you can kind of hear them and extrapolate from those stories. What are some things that you might be familiar with within your market? So let's start with 1031 exchanges. Now, perhaps not all of you are familiar with 1031 exchanges just from a very high level perspective. Within the U.S. federal tax code, the IRS has a provision, it's in 1031, where someone can exchange like-kind properties from one to the other without being taxed on the gains. It used to be any type of property where, for example, if you had an airplane and you sold an airplane, you could buy another airplane with those proceeds. And if you gained any profit from the sale of the first aircraft, you don't have to pay any taxes on those gains as long as you use it to buy another airplane. They did make a change, though, several years back where now it could just be used for property. So we're talking about real estate. So a couple things that sit within the rules here. First, when someone is going to do a 1031 exchange, the gain and the deposits from the sale of their property has to sit with a qualified intermediary until which time the new property is bought. So these are called qualified intermediaries or 1031 accommodators, as a couple different terminologies here. But that qualified intermediary or accommodator now has to open up an escrow account, right? So they're holding the money on behalf of the person that sold the property and is going to buy the property. We'll call them the exchanger in this particular case. The qualified intermediary is going to hold those deposits in escrow for the exchanger, and then they're going to proceed to do the paperwork that's necessary for the IRS to make sure that, hey, this is an approved 1031, they're following the rules, etc. So these qualified intermediaries have to open up these escrow accounts. You could imagine they have very specific things that they need to do. For example, the exchanger probably wants to be able to have access to the money, meaning they can't move the money because it's an escrow, but they might want to see the balance. They might want to have statements. The other thing that comes into play here is that these deposits oftentimes earn interest. However, the qualified intermediary typically will keep at least a portion of the interest, and they will then share the rest of that with the person that they're doing the exchange for. So there's complicated interest calculations. That split is not mandated by any IRS tax code. So it changes not just from qualified intermediary to qualified intermediary, but also changes from one exchange to a next. So if I were a qualified intermediary and I'm doing 10 active exchanges, I might be doing different interest splitting for every single one of those. Right, so keeping track of that, taking care of the 1099 INTs. These are the types of things that make it very difficult to do within the process of a core. And this is something that we help to facilitate and manage and look at to be able to help out in making it extremely straightforward. Now, there's two go-to-market strategies for a bank or a financial institution that's interested in this particular space. And again, this is something that we could talk more about. But one is you go after the qualified intermediaries, right? This is where you find the people that are doing the exchanges. Their day-to-day business is about drumming up more business, doing more exchanges, et cetera. And then you as the bank or the financial institution would hold those deposits for that qualified intermediary. So that's one way to do it. It's a great way to get more volume. However, that qualified intermediary is going to want a portion of the interest, right? And want to be paid for that. The other go-to-market strategy is there's several financial institutions that actually act as the qualified intermediary. So they set up a qualified intermediary program that is owned by the bank, or the parent company of the bank, that actually acts as the exchange. In this case, then now you as the financial institution need to drum up that business. However, since you are holding those deposits and you're the qualified intermediary, there are lower cost deposits because of the fact that you don't have to share with that qualified intermediary because that's you. So anyways, that's one particular use case. And it's really interesting. We had one bank that they launched ZEscrow. They found out this was a vertical they wanted to go after. started learning about qualified intermediaries, and within 2 months, they were able to get 2 different qualified intermediaries on the program and went from 0 to $17 million in deposits within that time period, and have continued to grow relationships as they've continued to grow there. And what's nice is, and this is just a quote from a 1031 exchange prospect here, that was just talking through this, because we do a bunch of sales support for our financial institutions. We don't go direct, we just work through you, but oftentimes our financial institutions will invite us to sales calls and stuff to be able to do demos and those types of things. And this was a quote we heard from there, which we thought was super great. All right, next one, let's talk about property managers. So there's a lot of different use cases for sub-accounting for property management. I'm going to talk specifically about security deposits just as an example. This is probably one of the biggest use cases that we have within our platform. When we started our company, this is actually where we focused before we broadened it to all different types of escrow accounts. So property managers, one of the things that they do is they will typically get a security deposit. If any of you rented, you're familiar with this. Where the tenant has to provide a certain amount of dollars. Usually it's equal to the first month's rent, but it could change and be different depending on the state, depending on the property manager. But the money that the property manager is now holding doesn't belong to them. It still belongs to the tenant. And the only time the property manager can actually take that money or use that money would be at the time when the tenant moves out, and then they have to do an inspection, if you will, of that property, and then see if there's anything where they would then spend that money to fix any issues that tenant left, right? So security deposits are an escrow account. Now, the difficulty with security deposits is that this is one of the examples that every state has different rules. And in fact, there's a few states that, even though there are state rules on how security deposits need to be handled, different municipalities have even different rules that need to apply. And so this creates a lot of complexity for property managers, especially ones that are from state to state. But just to give you an example, and I'll pick on the state where we founded ZSuite, which is Massachusetts. The state laws in Massachusetts state, first and foremost, that the security deposit that a property manager takes from a tenant has to sit in an individual account. They cannot be commingled. So that means that for every single property that they manage, every single individual unit, they have to have an individual account. Within the first 30 days of opening up that account, they need to send a notification to the tenant with both where it's being held as well as what the account number is. Next, this account has to be interest bearing, and all of the interest has to go to the tenant. That means you need to get a a W-8 or W-9 form, depending on the country of citizenship. That also means that then at the end of the year, there's 1099 INT forms, et cetera, that needs to be produced, all that fun stuff. And of course, that's not all. Next, that interest cannot sit in the security deposit account until which time the account's closed. It actually has to be dispersed on an annual basis. Right, so now we're talking about sending out checks or other types of way of dispersing money on an annual basis. And let's be honest, at least in the old interest rate environment, you were talking about pennies that you had to disperse. But here's the kicker: if a property manager or landlord misses any one of those requirements, the tenant can actually then sue that landlord, and the landlord would have to pay a fee of at least 2 times that security deposit amount. Right, so the kicker is there's actually some pretty big downsides if the property managers aren't following these rules. So again, now just think about the complexity, both for you as a financial institution as well as for these landlords of trying to follow all those rules. And then you go to another state and they have different ones. These are the types of things that we can help manage to make it very, very simple to follow all those rules from a state to state perspective. However, if you think about these deposits, oftentimes there's very low cost because most of the time any interest earned has to go to the tenant. Therefore, the landlord doesn't really care that much about what the interest rate is, as well as they usually stay there for a long time, right? Because even if someone moves out, someone else is going to move in. So though an individual security deposit might only stay for a year or 2 years or 3 years, as soon as they move out, a new tenant's going to come in and they're going to provide a security deposit as well. So it's a wonderful way to be able to grow deposits in a low cost manner. The other thing that we love about property managers is if you can help them with something to run their business more efficiently, like with their security deposits, they're more likely to use you to fund their next project or refinance their next loan. All right, so this is another quote from a user at one of our financial institutions. We have 800 units, and this is going to save us so much time. When can we get on it? The answer to that is quickly. All right, next use case. One that many of you might not have even thought of before in regards to an escrow account, but nursing homes. There's different types of nursing homes depending on what type of care is needed. There are certain ones like memory care units as well as assisted living, where many times the residents aren't able, they don't have the facilities to be able to manage their own money. And so what happens is the nursing home actually is the one that is facilitating or managing these funds. Now, if you could imagine, this is one that legislators are definitely focused on because they want to make sure to protect the elderly and make sure that they are not being abused, especially if they are not able to take care of themselves. And so with that, there are a lot of different rules that they need to follow. But if you could imagine, every resident needs to have their own individual account, have accounting for those dollars. It needs to be very clear and transparent what transactions are being withdrawn and for what services, so that it's very, very easy to audit, right? But there is a very clear requirements of separate accounting and escrow accounting that's extremely helpful here. You know, we have one financial institution that we work with who they actually built out a business in this particular space prior to using us. They built it up to 18,000 accounts, really good amount of chunky deposits. But again, they found that the way that they were doing that was very, very manual. And so they're excited to move that over into our platform to be able to make it a lot more straightforward, to be able to manage the complexities here, as well as to make the audits that the nursing homes have to go through much more straightforward, to provide all the reporting that they need to be able to get that clean audit. All right. Municipalities. You know, municipalities are there's a lot of use cases for escrow and subaccounting across municipalities. One of my favorite things someone taught me very early on when we were building out this product is, you know, the escrow accounts at municipalities might make up only 10 to 20% of the deposits, but they make up 90% of the headache. So that just gives you an idea there. But the idea is if you can help them with that thing that produces the biggest headache, then your ability to get more relationships and broader relationships across the board definitely does increase. So a couple different use cases that we see with municipalities. So one is retainage accounts or surety bonds. This is when a contractor is working with the municipality to do some sort of big project. Oftentimes they need to put a certain portion of the contract of the cash up in an escrow account in regards to insurance or whatnot, and the surety bond or retainage account, like I said. We have other ones where it's custodial accounts. So you have money that the state is holding for it on behalf of minors, as well as other people who might not be able to do that themselves. We have police departments who seize funds. They actually kind of keep track of this. We have school districts that have funds that are at the district level, but they have certain sub-accounting between each actual school to keep track of those funds. We have others that they have a budget to spend from year to year perspective. They have it sitting in an account, but they want to make sure that they can earmark all that money. It's like, hey, if it's in this account, it's actually earmarked for specific spending within the fire department or specific spending in for the Parks and Rec department, and there they actually go into individual projects. Now, if that in of itself was all that was needed, you know, there's various different ways that they could do it. But if you go a step further, lots of times they have reporting requirements that they need to provide the city needs to provide back to the legislators or back to whoever is going to be accountable to, or who they're going to be accountable to, making sure that they're using their funds in an appropriate way. And so having these different escrow accounts and sub accounts help them to be able to provide that level of visibility to whoever it is that needs it. We had one financial institution that after launching with ZScrow, they really were focused on municipalities, and within 4 months, they were able to get 6 new municipalities, business that they've been going after for quite a while. From just an escrow deposit perspective, they were able to 4x their amount of deposits that they had on the platform, as well as open up the opportunity for a lot more deposits across that relationship, not just on the escrow side. And again, just a quick quote from a direct municipality after seeing a demo of the system. All right, last one that I wanted to share briefly is when it comes to insurance and payouts, and there's different verticals where this happens. I'll just share kind of on the health or medical side. Oftentimes, when there is a claim of some sort and it's going to be paid out, there are strings attached to that payout. They can only be used for medical expenses. And if you think about other types of insurance or whatnot, like whether it's in the housing market or something else, right? Money is going to be given out, but they don't want to give it to the actual consumer, because if they had that money, they could then use it for whatever, and they want to make sure that it's being used for the purposes of which it's been set aside for. So you do have different companies that exist as third-party administrators or whatnot, where the insurance claim goes to them. They hold the money for and on behalf of those individuals, and they also pay the bills for and on behalf of those individuals. So the money is not the insurance company's money. The money is not the third-party administrator's money. It's actually the end consumer. However, that end consumer is not a signer on the account, nor do they have access to withdraw that money. That third-party administrator is paying bills for and on behalf of those consumers. And so, we have hundreds of millions of dollars sitting in these accounts for some of our users, and it's a really interesting use case, across the United States there. So again, here's another quote here, but again, the main point of sharing these 5 stories isn't to say necessarily that you're going to, bank third-party administrators or municipalities or property managers or 1031s or all of them. More, it's to paint the picture of what are we talking about when we talk about commercial escrow and sub-accounting in regards to a deposit growth strategy to be able to help kind of build out that liquidity there at your financial institution. So as we launched this new product, this ZScrow product, we are, it's been awesome seeing the growth of the number of commercial customers that are using the platform, as well as the deposits. And so you can see this one here. It's a breakdown of total organizations that have been using ZScrow back from 2022 December to just at the end of last month. So just in a year, you could see the amount of adoption that we've gotten across the banks, financial institutions that we work with. And all of these verticals that you see here down at the bottom are represented in different ways. And then if you actually then tack that back to deposits, so the actual deposits on the platform, and this one is a little bit of a different timeline. So this one goes all the way back to 21. You can see the growth of total deposits on the platform. So this is not representative of additional deposits outside of the escrow. This is completely just those deposits that are being managed on the platform. We feel very grateful for our ability to grow and help so many financial institutions in the United States in a critical time of trying to grow those deposits. And always excited to really, more than anything else, make sure that we serve our clients in a positive way and provide the support that they need to be able to be successful. So, just have a quick quote here from one of those partners that we work with. This is Giovanni from Encore Bank. At this point, we work with over 80 financial institutions, the majority of which have actually signed up this year. So a lot of them are early on in their journey in growing deposits with commercial escrow and sub-accounting, but very excited to continue to help the market in this way. So now that we've talked about some stories, we've discussed commercial escrow and sub-accounting, I did want to just provide a quick demo of the platform just to kind of give you an idea of what it looks like in regards to the support of these things. So this demo is probably going to last maybe 5 minutes, 8 minutes, something like that. If anyone has any questions, please feel free to drop those in the chat, and we will take them as we go. So I pulled up our demo environment. So this is Focus Federal Bank is our demo financial institution here. And then each of these tiles represents a commercial customer of Focus Federal Bank who's using the ZEscrow platform to manage their escrow and sub-accounting. Couple things just off the top. This platform is meant to be an extension of your treasury management, cash management services within your digital banking suite, right? So think of this as an extension to whatever it is that you're currently offering. You can name the product whatever you want. We make sure to be very clear that it's your offering. ZSuite Tech is completely invisible in the background. We do support you all throughout your customer journey. So we're happy to do demos for prospective customers, prospective users, even if they're existing, helping onboard, helping training, doing all that stuff. So we're there for you the whole time. But if we are talking to one of your customers, we are doing that as representing y'all, not as representing ZSuite Tech. The platform itself has 3 levels of access. So you all at the financial institution have this. You have complete access to all of the commercial customers that are using the platform. You're able to dig in and see all of their escrow accounts and sub-accounts. You're able to help them if you need to. You're able to pull reports, all those types of things. So complete and total access for you all as a financial institution. The second level of access would be the commercial customer. So Bishop Lane and Braxton, who's a law firm, they would be able to log into the platform. They would be able to open up their own escrow accounts and sub-accounts in a self-serve fashion. We found that to be extremely important and desirable for your commercial customers because it makes it way more efficient for them as well as for you. The third level of access is limited and it is optional, but it's there, which is the beneficiary or that third party. So if you are working with a type of account that has some sort of third party associated with it, like, we talked about tenant security, it would be the tenant. Or if you're talking about a law firm, it would be their client. If you're talking about a municipality that's holding that surety bond until which time it's going to be released, it would be for the company that's doing or fulfilling that contract, right? The ability, the commercial customer has the ability to maybe just have them fill out a W-9 electronically. Maybe it's providing statements to them electronically, but they could go as far to actually giving them read-only access through the digital portal where they could view the statements, they could view the transactions, they could view the balances whenever they need to or want to. So those are the 3 levels of access. When possible, we love doing single sign-on for those first 2. It's not a requirement, but we do love to do that. So whether it's, for the bank side or the financial institution side, whether it's the, Azure or Okta or Active Directory or something like that. And then for your commercial customers through online banking is definitely what we prefer if that is possible. So when a commercial customer is going to use the platform, like I said, one of the biggest things is to be able to do it self-serve. So I'm going to, we didn't talk about a law firm story, so I'll go ahead and show a law firm example just to give you one more look at how some folks might use it. So I'm going to pull up John Smith & Sons Law Group. As I mentioned, the bank itself has the ability to log in to be able to do whatever needs to happen with these folks. But more importantly, the folks at John Smith & Sons Law Group would be able to do so. You could see $206,000 across all of their escrow accounts and sub-accounts. You could see that over here is where their accounts are broken down. We have multiple folders that have been set up. It's extremely easy to add folders and name them whatever you want, depending on what it is that however they want to set it up. If they don't have a lot of sub-accounts, maybe they don't use folders, so it look more like this, but most of them do have some sort of structure. As they create these folders, and you can create subfolders within there as well, it stays persistent throughout all of the reporting, throughout the statements, etc. So from that perspective, they can pull their statements right from here. They can see transactions that are funding the sub-accounts, or if it's moving out of the sub-account right here. They are able to pull reports right from the platform as well, download it in CSV. There's a whole date picker that they could use from that perspective. They could dive into any of these individual sub-accounts as well to see what's going on. So we have here both the deposit and withdrawal for this one, any completed documentation here. You can see transactions going in and out. If they needed to make any additional transactions, they could do it right from the system. They could close out the sub-accounts right here as well. The beneficiary information, if anything changes, such as email address or phone number or whatever it might be, they can edit that there. This is also where they have the ability to give that read-only access to that beneficiary if they want to, for them to see what's going on from that perspective. So a lot of opportunity here. And then in the account documents section, you can see the W-9 here. If this were a sub-account that did require, or that the commercial customer wanted there to be statements, you could see the statements in here as well. But they also have the ability to upload their own documents. So let's say, as an example, this lawyer is doing this. I think we have this in the 1031 folder. So it's a 1031 exchange, and they want to upload the exchange agreement. They could do it right here. John Smith & Sons also has let's say they have a practice where they are doing estates. So they're managing money or holding money for estates. Perhaps in one of these sub-accounts, they might be holding those funds until certain instructions were fulfilled. And perhaps they want to put those instructions right here within that account document space. So a lot of opportunity, again, for that law firm or for that property manager, whoever, to self-serve all the way up into the point of creating new sub-accounts. So as they create new sub-accounts, they have an ability to name the account whatever they need to. Maybe they have some sort of internal ID that they want to tie it to. Maybe they want to put the beneficiary's name so it's easy to look up. Maybe they want to put both of them. We then determine what type of beneficiary, whether it's a U.S. citizen or not. That helps us to know whether to get a W-9 or W-8 form. We'll then figure out which of the folders we'll drop it into. Let's say this is a custodial trust account here for Henry. We need to get this W-9. So we could do it in one of two ways. They could choose to email the beneficiary. So they'll just put Henry Smith's name and email address right here. Our system is hooked up directly to DocuSign. So this would create envelope in DocuSign, automatically sent to them. They could fill it out, and that ports back directly into the platform. However, if they already have the W-9 or they feel very comfortable with their processes, they can always manually upload it, where let's say they get it during the point where they write a contract with them, they get it to sign up. Part of that signature is a W-9. So they take that information, they can type it in here. The next screen is uploading a file so that we have a data artifact showing that they have this information. If they don't have it, they can always finish later. And you'll see this account is opened up in the incomplete status, and they can come back and finish it whenever they want. So a lot of self-service activity there, which is great. Now, the last thing that I wanted to show just from a demo perspective is, as we've talked about the different types of uses, from surety bonds, municipalities, to lawyers using it for estates, to 1031 exchanges, to property managers having different rules in different states. If you can imagine, there's a lot of complexity on how these sub-accounts work. And so that's where we build these templates. So I came back to Focus Federal Bank and looking at the settings tab and showing you these configurations. You'll see a bunch of different templates here. We build these templates with our banks to be able to support all these different use cases. Once we build a template, think about these are the rules that govern a sub-account. We can apply that template to a whole swath of clients. So for example, every single property manager in Massachusetts is going to use the Massachusetts security deposit template. That's just the way it's going to work. You could apply a template to a specific client. So maybe you have a very specific client with a specific use case that has their own rules. No problem. Every sub-account will follow this template. But you could take a template and apply it all the way down to a specific sub-account. So the types of things that we can put in the template, one of the questions is always interest. Is it interest bearing? Is it not interest bearing? If it is interest bearing, what's the rate? In this case, let's say it's 3%. Who's going to get the rate? Who's going to get that interest? Is it going to be the beneficiary? Is it going to be the organization? Is it going to be split between the beneficiary and organization? Or does it go to another party? This would be like in the case of like an IOLA account or IOLTA account. And let's say if it's going to be split, then the next question is okay, how's it going to be split? Is it going to be an interest or is it going to be through fees? How do we calculate it? Is it a 50-50 split? Is it a 75-25 split or 57-43? And then for the organization, is there certain sweeps that have to sit? Are there tiers that are required on these different interest rates? Is that tier based off of balances? We've also had some use cases where it's based off of age of the sub account. So, and then some other things that we can put in here are going to be like certain notifications that need to be sent out at certain periods of time, or the delivery of statements for beneficiaries. Because, as a financial institution, you don't need to provide statements to beneficiaries. However, your commercial customer might need to. So a lot of different things that we can put within these templates to support all of these use cases. So as far as the demo goes, as well as the content that we wanted to cover today, that concludes kind of those prepared remarks, if you will, that we had to discuss. If we do have any questions, happy to talk through those. And I think we just had one hit. So we will address these questions as they come through. But again, thank you all for your time. So
thanks, Nathan.
Yeah.
Go ahead.
So Julie is asking, do the sub-accounts hit the FI's core? Asking as I would think we would need specific account document side with each new sub-account, or is a sub-account just on your system and on the FI is just one account? So the way that we do set this up is we create what we term a holding account on the core. And that holding account is where all the deposits are going to sit. And then the ZScrow platform, your instance of the ZScrow platform, sits on top of that holding account to be the system of record for all of the individual sub-accounts or the escrow accounts. So it is the second one that you were referring to. We do work hard and we work directly with our financial institutions that any specific documents that are required for those escrow accounts or sub-accounts, that we can capture them as part of the workflow. But oftentimes the general structure of both the sub-accounts and escrow accounts requires a lot less paperwork required for each individual sub-account. But yeah, the sub-accounts, we do not open those sub-accounts on the core. There's just one big holding account on the core, and then your instance of ZScrow becomes that system of record for all of them individually. So thank you for asking that question, Julie. Any other questions from our esteemed listenership for today?
And now we have a good group today. Looks like we might have a couple more.
Yeah, absolutely. As they're coming in, I can whistle the Jeopardy song if that would be helpful.
Always helpful.
Yeah. Okay, so Julie, if asking who do we contact if you want more, if you want to learn more, so there's a couple things that I could say from there. First, here is contact information. So our website is ZSuiteTech.com. My own email address is Nathan@ZSuiteTech.com, so you can definitely send me an email directly also. If you go to ZSuiteTech.com, we do have a contact us form that you could fill out that comes directly to our team where we can follow up. So I'm happy to chat. Not right now, but in the future. All right. So, Mark, what fees apply to the FI and or the FI's clients? So, thank you for that question. I think that it helps us not only to address that question specifically, but also help philosophically kind of talk about how we think about our business. So we want to make sure that there is in no way, shape, or form it's construed that we are going direct to your clients. So in all cases, the only person who we bill would be the bank or the financial institution that we work with. And we have, it's a typical SaaS model. There's some sort of setup. There's some sort of annual licensing fee, and then based off of usage, there's some variable fees. So it's a straightforward pricing model. It's very easy to calculate and very easy to understand. And then as far as the bank goes, it's 100% up to you, just like your other cash management tools, on what and how you go to market on the pricing for these services. Some of our financial institutions who are really aggressively going after deposits might choose not to charge anything for it. Some of our institutions do a relationship pricing model where they look at the entirety of the relationship of that commercial customer through analysis fees, how many deposits they're going to bring, what type of interest rate are they going to pay, do they have any loans, et cetera, et cetera, et cetera. And they look at the entirety of the relationship, and then it's based off of the entirety of the relationship that they then decide what to charge or what interest rate to give or how much to charge for the loan. And then we do have some clients that do have specific list prices for the escrow and subaccounting services. Sometimes it depends a little bit on the use case or the vertical. And then, the salespeople have the ability to negotiate as they need, as they drive it. So I hope, Mark, that helps and answers your question in regards to what you were looking for there.
Great. Great. Well, thanks so much to everybody for coming out to the webinar today. I hope you have a lovely holiday season and get some good rest and restoration over this time. Thanks, Nathan.
Thank you.
Bye.
And thank you all for coming.
Mm-hmm.